Good afternoon, everyone. Give us just one more second. We have a few people coming through that we'd like to make sure are involved in the webinar.
Hello?
Alrighty, well, we have a few more people joining us. Good afternoon and welcome. My name is Jessica McClellan and I am the Practice Growth Manager here at William Vaughan Company. I will be your moderator for today's webinar, PPP Easy Forgiveness Application and Calculator, a step-by-step walkthrough. Just a few housekeeping items. We ask that everyone please remain on a listen-only mode, so please mute your mics and please keep off the cameras so we don't cause any disruption. We appreciate your cooperation with that. Please note there will be a question and answer session at the end of the presentation using the questions that you submit during the presentation via the chat feature, which should be at the bottom of your screen. If you click the chat feature, you'll be able to send questions to myself and we will get Kate to answer those at the end of the presentation. Finally, a recording of today's session will be provided in the day coming. Please keep a lookout for that email from our team. So with that, let's begin. As many of you know, the Paycheck Protection Program was established to help small businesses recover from the after effects of the COVID-19 pandemic. However, it has left many owners overwhelmed as a result of the ever-changing guidance landscape. On June 16th, the Small Business Administration, in consultation with the U.S. Treasury Department, released the Paycheck Protection Program Easy Loan Forgiveness Application. This new easy application has fewer calculation requirements and less documentation, a much needed relief for many. Today, we're going to walk you through the easy application and our WVC loan forgiveness calculator to provide clarity and guidance so you can make the most of your funds while maximizing your forgiveness. With me today, I have Kate Matz. She's a WVC partner and the firm's advisory service practice leader. In addition, Kate has been the firm's PPP task force leader and the creator of this glorious forgiveness calculator. With that, I pass it over to Kate.
Thanks, Jessica. Welcome, everybody. So as Jessica mentioned, we are going to talk today about the easy application for forgiveness, as well as how you can use the WVC calculator to assist in the calculations for that application. So we'll go through what the easy criteria are, run through a couple of examples. So we'll use kind of a real simple one. Somebody that would be a Schedule C without employees and run that through, see what that looks like. And then we'll do another example with a company that would be an LLC, taxed as a partnership that has some employees, and kind of show you how some of those things work through the calculation as well. Take a look at the application, how you can translate the information from the calculator to that. Finally, we'll wrap it up with a little bit of a discussion on some of the required documentation that you'll need to submit with your application and take some questions from you. All right, so let's get started here. So I mentioned we'll kind of work through these couple of examples with companies, and we'll start out with example of company A. This is a Schedule C company that has no employees. 2019 business income was $50,000. So this would be the net income from the business on line 31 of Schedule C is what we're referring to here. They were able to get a PPP loan of $10,417, and they received their loan proceeds on 5/4 of 2020. So we'll take these facts and kind of walk it through step by step as an example of how to use this. Now, if you are a company that has a little bit more going on, don't tune out, still pay attention to this first part because I'll kind of be going through some of the basics here that will also be applicable to you when we get to the little bit more complex example. So first thing would be to open up the WVC calculator. So where you can find that is if you navigate to a browser and go to wvco.com, it will open up our website. Give it just a minute here. There's this COVID-19 Resource Center. You'll click Learn More. And this will bring up our overall COVID-19 Resource Center. We've got a lot of information here on COVID-19, as well as the PPP program and other programs that have been made available to help businesses, information about upcoming webinars, FAQs, blog posts, all sorts of helpful information. But what we're talking about here today is this loan forgiveness calculator on the right-hand side. So click there, that will bring you to our forgiveness calculator page. And from here, you'll be able to see the most recent date that it's been updated. We do update this regularly, so anybody that's been following along with the guidance or listening in on our webinars know that guidance changes pretty rapidly here. So we do update the calculator as quickly as possible after those new various guidelines and interpretations come out from the SBA and Treasury, as well as we update for enhanced features when we get feedback from people like you that are using it and find some things you'd like for us to add. So you've got the most recent date, click on the button, and that will download the calculator for you. So we'll open one up here and start walking it through with our Company A example. Now, when you first open it up, you will notice at the top, there's a little button here that asks you if you want to enable editing, and there'll probably be one that will ask you if you want to allow macros as well. Yes, enable content. So you will want to go ahead and click yes on those. If you do not enable those, you will lose some of the functionality from the calculator. So make sure you click yes on those items. A couple of notes on just how this is set up before we kind of get into our Company A example. The first tab, we do list all of our updates. So each of our release dates, we make some notes here on the key things that we have changed. This way you're able to look and see based on the most recent version that you have, what has changed since then. And again, sometimes it's because guidance has changed and it would actually change the outcome of your calculation. Other times it might just be some minor formatting. So for example, we did upload a new version that was updated through yesterday, just had some minor formatting changes that make it a little bit easier to follow, but nothing substantive. Then across the bottom, you see that these tabs are actually numbered 1 through 8. They are numbered because we want you to fill those out sequentially. So when you start at 1 and then work your way over to the right, each one's going to build on the other ones. And based on information that you input early on, it's going to update some of the cells in the future tabs and maybe even make some of the cells not applicable to you, or even the full tabs not applicable to you. So it is important to really start at tab 1, work your way through them. Don't jump in the middle. You'll probably get lost because some of the things might not make sense. All right, we'll pop over here to tab 1 with the instructions. A couple things again before we get into this example. We do have this link here in the middle to get back to the calculator page on our website. And always good to just check that periodically, make sure that you've got the most recent update. We also have down below here links to the application forms that are posted on the Treasury website. So on the left, you've got the application instructions and application form for the full-length version. Over here on the right, you've got the easy instructions and the easy form. When we scroll down a little bit, we've got some color coding that's important to understand too on how the calculator works. So this first section here talks about the tabs. So anywhere that there's a tab that's got this kind of salmon color, that means that there's things on that tab that you either will need to input or you may need to input. You should take a look and see if based on your particular circumstances, there's something that you're going to need to input there. Gray tabs mean that you do not need to have anything that you're going to input on that tab. And this will be gray based off of things that you're going to input on earlier tabs. So we'll see this happen. Right now, there are no gray tabs, but as we start to work through, we'll see that some of them turn gray based off of the inputs that we use. The bright blue then, these are outputs that you're going to use to complete the application, and we'll walk through that. The dark bluish gray, these would be kind of outputs that you would attach to the long form of the application if you had to fill out the long form. There's some worksheets that get attached. So the calculator is designed to spit that out for the folks that need to do that. You folks being on the easy webinar here might not be applicable to you. This next section then on the colors talks about colors for individual cells. So similar kind of color coding. The salmon color means this is an input cell, so this is where you would enter data. Gray means that you should not put anything in the cell. It's not required for you based on, again, other information that you have put in elsewhere. And then the white is a calculated field. So you're not able to input there. You'll have to input in the salmon colored fields, and then the white cells will automatically calculate based on those. All right, so let's go back to our company A and start filling this in to see how this would work through for someone in that situation. So we'll say company A, and we said that the loan amount that they received was $10,417. We'll assume that they received their loan number from the SBA on 5/1. They actually got their proceeds on 5/4. And then they're estimating that they're going to submit their application for forgiveness on 12/15. Now, each of these dates drive different components of the calculation, again, all based off of the rules and guidelines that have been issued by the SBA and Treasury. The most important is this one here, the first date the proceeds received. That's what's going to drive the first day of your covered period. These others are much less important as far as how they factor in, but definitely you'll want to put them in nonetheless. There are some descriptions here as far as what they impact. For company A, they are not going to use this alternative payroll covered period, so we'll leave that blank, and they are going to use a 24-week covered period. So that's what we would put in here on the first tab, just some basic information about the company, the loan amount, when they got it, and what sort of duration they're going to be looking at for their covered period. So we'll move over now to tab 2, and this is where we're going to look at if you qualify for using the easy application. So what you see here are the criteria that comes right from the easy application instructions. So this is word for word, exactly what's on there. And if you meet any one of these 3 criteria, then you're eligible for this easy application. So let's walk through these here and see if we qualify for any of those based on the facts that we have laid out for company A. So we say the first one is the borrower is self-employed, an independent contractor or sole proprietor, and they had no employees at the time of the loan application. So that fits right in with what we laid out as our facts for company A. We said they're a sole proprietor, Schedule C, no employees. So we're going to go ahead and change this to yes. Now, as I do that, watch down here, this eligible for easy application is going to change from no to yes. And then a couple of these tabs down here are going to switch from salmon to gray, indicating that they're no longer necessary. So since you only have to meet one of the 3, we don't really need to look at these other 2. We're going to skip by those for right now. We'll come back when we do company B and talk about what those mean. So let's move over now to tab 3. So tab 3 is where you would list out any employees that made less than $100,000 in 2019. And you'd fill out some basic information about their name, their identifier, and compensation. And you can see there's a lot of area here that's gray, meaning that this is not required. for you as somebody that's filling out the EASY application. If you did not qualify for EASY and you had to fill out the full long form, then all these other columns would be necessary to fill in as well. In this instance, we don't have any employees, so there's nothing for us to input here, so we'll keep moving. Tab 4 then is where you would input employees who made more than $100,000 in 2019. So once again, Company A has no employees, so we'll keep moving. Tab 5 and 6, we get to skip right over. They're gray, telling us we don't need to do anything there. We'll move over to 7 then. So 7 is where we're going to input our non-cash payroll items and our non-payroll items that are eligible for forgiveness. Now this top section, the non-cash payroll, these still have to do with employees. So it says right here, do not include amounts paid to owners on this tab. The owner compensation is going to go on tab 8. So we're only looking at employees. And again, we've got no employees for our company A. So we can just plug zeros in here. Move on down to the non-payroll expenses. We've got mortgage interest, rent, and utilities to consider. So let's assume that for this company, they've got nothing by way of mortgage interest. Getting into rent though, let's assume that they pay $1,000 per month for rent. And since they're using the 24-week covered period, that's 6 months. So we'll do $1,000 per month for 6 months. We'll plug in 6,000. Now you do have the option, you can actually go and kind of schedule this in using this week-by-week tracker where you record the actual dates that you're making payments. Can really be helpful if you kind of want to track, okay, what have I actually spent, and then estimate out into your future periods. Here's what I think I'm going to spend or incur. For purposes of just to kind of keep things moving here, I'm going to plug it all in this one cell. So you do have a little bit of flexibility on kind of if you want to take a shortcut or if you want to schedule out the individual payments as you're going to fill yours out. All right, for utilities, let's assume that they have $200 per month in utilities. Again, this is for 6 months. So we've got $1,200 in total utility expense. All right, so that is everything for tab 7. I'll move over to tab 8. And this is where we're going to input the owner compensation information. So at the top here, we want to select our entity type as a Schedule C. And you can see that made these two columns gray, meaning that health insurance paid by the company and company retirement contributions are not eligible to be included in the forgiveness calculation for Schedule C folks. We'll plug in here owner 1 and an identifier. Let's say that in 2019 they made $50,000 as their cash compensation. Again, this is based off of the line 31 from the Schedule C, so the net income from the business in 2019. Now we come over and we look at the covered period for this individual, and there are some special rules for how you're going to look at compensation for Schedule C folks for the covered period. And basically the rules say that if you are using the 24-week covered period, which we are here, you're going to take your 2019 business income, so that same $50,000, and you're going to take 2.5 months worth of that. So we'll divide by 12 times 2.5. So that gives us the 2.5 months worth of 2019 business income. And that's the way that they're looking at what is a reasonable amount to assume as a compensation replacement for Schedule C folks during that covered period. So we'll see when we go through and look at the other example, that's the LLC tax partnership, that there's a different way of thinking about it. So what I'm describing now is specific to Schedule C folks. All right, so that's it. We've filled out now everything that we need to on these peach or salmon colored input tabs. Now let's flip over to the loan forgiveness, which is the bright blue. And again, the bright blue indicates that this is the output of everything that we've input, and it's actually going to show us if we've achieved full forgiveness or not. And it's going to provide us the information that we need to use to actually put on the application itself. So let's just take a quick look here at what we've got. So our payroll cost, the $10,417, we didn't have anything for mortgage interest. Our rent is $6,000, utilities $1,200. We've got a section here that's gray. So again, this is something that we don't need to worry about because we're using the easy form. So we just skip right over that. Come down to our modified total. So this is in essence all of the dollars that we spent during our covered period that they get to count towards forgiveness. We've got 17,617. Our PPP loan amount that we originally received was at 10,417, and our payroll cost 60% requirement, again, this is all calculated out through there, is 17,361. So we take the smaller of these three, and that's what drops down here for the amount that we are eligible to apply for forgiveness. And in this case, it's that 10,417, which is equal to the PPP loan amount. So we have achieved full forgiveness. I'm just gonna scroll to the right here and show you there are some other tabs that are all grayed out. So again, being able to use this easy application form greatly reduces the inputs as well as the outputs and the different components that you need to fill out for the application itself. So we've gone through and we've done the calculation. We are now ready to go and put it into the application itself. So let's pull up the application. If we go back to the instruction tab here, we've got those links. So we can click on the link and open up that application form. Okay. So the easy application form is pretty short. There's this first page here where you're actually doing your inputs and general business information and those dollars we just calculated. The second page is a bunch of certifications. And then the third page is some optional demographic information that you can skip over if you'd like. So let's walk through the details here. So first page at the top, we've got just some general business information. So name, address, your tax identification number, etc. You'll want to make sure that as you fill this out, that business legal name and the identification number match right up to exactly what you put on your application. So they're going to be processing a lot of applications, and you don't want them to run into any hiccups with not being able to match things up. So make sure that those match up and then get all of the contact information in there as well. The next section then is just some general information about the loans that you received as part of the CARES Act. So you'll have a PPP loan number from the SBA that you'll plug in. You'll also have one from your lender that you'll plug in, the amount, the date, the employees, and then if you got anything from the EIDL. So the EIDL, that was that disaster loan that also has a bit of an impact as far as the PPP forgiveness. So you plug all that information in. If you don't have it handy, go back, talk to your lender, they'll have that for you. One thing, as we think about our company A and them being a Schedule C with no employees, it's not really clear, this employees at the time of loan application and employees at the time of forgiveness application, what you should be plugging in there. If that should be a 0 because you don't have any employees, or if that should be a 1 and you count yourself as an employee. I'd say talk to your lender about how they're interpreting that. There hasn't been anything that's more broadly come out along those lines. Next section then is going to be a few items that are going to impact how your calculation works. So you'll check the box on the payroll schedule frequency that you have. You'll fill in your covered period, and then if you chose to use an alternative payroll covered period, you'll plug in those dates as well, and those can all be found on the calculator. So you're plugging in the first dates, and the calculator shows you those end dates. And then if you did receive a loan in excess of $2 million, you'll click this box over here. That will guarantee that you get an audit. If you have a loan less than $2 million, you're eligible for potential audit. If you have over $2 million, you will for sure get your PPP application looked at. All right, let's scroll down here then and take a look at the dollar amounts that you'll have to plug in. Okay, so this should look pretty similar or pretty familiar, as these are exactly the lines that we walked through on that output page of the calculator, and they'll just flow right over. So lines 1 through 4, we've got payroll, mortgage interest, rent, and utilities. And if we flip back to the calculator, same thing, we've got lines 1 through 4, payroll, mortgage interest, rent, and utilities. So you would simply take those numbers and type those into 1 through 4 on the application. Lines 5 through 7 are your potential forgiveness amounts. Again, we get those right from the calculator, lines 5 through 7 here, so carry over those amounts. And then 10,417, the lowest of those three, will go in the bottom line there. So very easy once you've kind of gone through the thought process of working through the calculator, tracking your weekly and maybe estimating out. It's very easy to go in and kind of, you've got all the numbers to fill in here. Once you then get that part done, you're going to look at page 2. And again, these are these certifications. Basically, you are certifying to the fact that everything that you used in your calculation and the fact that you are using the EZ application, that you're eligible for that, that all of those documents are real, they're accurate, they're complete, nothing is false or fraudulent. So they've got a bunch of different ways of basically getting at that you're providing true, accurate, complete information and it's not fraudulent. So you want to read through each one of those, need to initial each box. And then at the bottom of the application, there's a couple questions here that, again, get at your ability to use the EZ application. So this is looking at whether you had any changes in your level of employees. So if you had reductions in your FTEs. For our company A, that was a Schedule C. This first one here, the borrower did not reduce the number of employees or average paid hours of employees. This would be the one that the Schedule C folks would initial. They don't have any employees, so therefore they didn't reduce any employees. Sign and date. So that's really it as far as what it would take to fill out the calculator and then the application for a company that is a Schedule C with no employees. One thing to note also, this is the form that is released by the SBA and Treasury, and I said, like, that's what we've got linked to from the Treasury website. Some banks may use this form and have you fill it out here. You can just kind of type right into it and submit it to them that way. A lot of banks are actually designing online portals that you will go in and fill out the information electronically, and it will submit through a little bit more of an automated process. It will be the same information. So since all of this has to go to the SBA eventually, if your bank comes up with their own application, it will be based off of this form. It might look a little bit different, but it is going to ask for all of the same information. So it's worth kind of taking a look at this, getting very familiar with the different certifications and things that it's asking, and making sure that you're comfortable with all of those, even if your bank isn't quite ready to start accepting forgiveness applications quite yet. All right, so that is company A. Let's take a look now at something a little bit more involved, and that would be our company B. So company B is an LLC taxed as a partnership, and they've got 6 employees. Now, they used to have 7. They did let somebody go during the covered period. They reduced their salaries and wages by 10%. We do note that they've reduced their operations to comply with social distancing guidelines. So we're all familiar with a lot of the orders or guidance that are coming out from federal, state, and local officials. And this company was one that was impacted by that. So in order to be able to comply with social distancing of keeping 6 feet apart, they did have to reduce their level of operations. They got a PPP loan of $100,000 and they received that loan on May 4th. So let's run through another example then of the calculator for company B. So we'll enable all of our content here. Okay, so we say we're looking now at company B. Loan amount received was $100,000. We'll assume that they got their loan number on 5/1. We said in our facts that they got their loan on 5/4. They're also estimating 12/15 as their forgiveness application date. Now, company B, since they have employees, they would like to use this alternative payroll covered period. It's going to make it a little bit easier for them to pull the reports to line it up with their covered period. So we'll say that the first day of their alternative payroll covered period is going to be 5/11. And they're wanting to look at 8 weeks. So if they go through the calculation for 8 weeks, are they able to get full forgiveness or not? So let's look at tab 2 here and the criteria for the easy application for company B. So we've seen this before with company A, and company A met this first one, that they were self-employed with no employees. So that does not fit our facts in company B. So we'll put no here. Number 2 then says that the borrower did not reduce the annual salary or hourly wages of any employee by more than 25% during our covered period. Now, our facts told us that they reduced the salaries and wages by 10%. So they're still good here. They had a reduction, but it wasn't more than 25%. So they still meet this first part of this second criterion. This is a 2-parter though, so we have to meet the second one as well. So the second one says, we did not reduce the number of employees or the average paid hours between January 1st and the end of our covered period. Now, our company B did reduce the number of employees, right? They had 1 employee that they let go. So we're not going to be able to meet this one. So we'll say no here. So let's take a look at our third and final criterion and see if company B is able to meet that one. So this starts out the exact same way as 2, that they didn't reduce wages by more than 25%. We said we're good there. And the second part here says they were unable to operate during their covered period at the same level of business activity as before February 15th, 2020, because of compliance with established or with requirements established or guidance issued between March 1st and December 31st by the Secretary of Health and Human Services, the CDC, or OSHA. Now, those are all federal agencies. There has been some guidance that's come out interpreting that subsequently that has expanded that to mean it's not just federal agencies, but if you were following state or local orders or guidance, that counts as well. So this does meet the fact pattern of our company B. So company B, they had reduced the level of business activity because of social distancing guidelines issued by their government. So we're going to mark yes here, and we'll see the same thing that we saw before. Eligible for easy application becomes yes, And we've got a couple of tabs that gray out, meaning we no longer need to worry about filling those out. So good thing. All right, let's move over now to tab 3. And we said we do have some employees. So let's plug in some information here for employees. So we'll say we've got 5 employees that in 2019 made less than $100,000. So we'll plug in information for these 5 individuals. So again, we've got this big gray area that we're not required to plug any information in. Those would be if we had to fill out the full form. So we get to skip right over that. We'll come over here to our salmon colored cells. And since we only have 8 weeks, let's go ahead and schedule in payroll for each week for these folks. So let's say we've got one that made $500 a week, another at $750, another $1,000, $1,250, and $1,500. So we've got our weekly payroll for all 8 weeks in, and that then populates for us the cash compensation during that alternative payroll covered period. All right, we'll move on to number 4. And so let's say we had one employee that made over $100,000 in 2019. And we'll plug them in here on tab 4. So they're making $2,500 a week. So if we've got $2,500 per week that we're actually paying them and we plugged in, that is a total of $20,000 that they were actually paid during that 8-week alternative payroll covered period. Now, when we look at what was actually being counted here during the in the calculation, it's $15,385. So that is because the calculator is automatically limiting that for us based on the caps that are in place through the guidance. So we are capped out on the compensation that we can put into this calculation per person to be the equivalent of $100,000 annually. So $100,000 annually, you prorate that out for 8 weeks, it's this $15,385. All right, so we get to skip 5 and skip 6, they're gray. Move on to 7. So 7, we're looking at the non-cash compensation payroll cost. So the health insurance, retirement benefits, and SUTA paid by the company. And let's assume that they've got $5,000 of health insurance they paid during the period, $2,000 of retirement, and another $1,000 of SUTA that was paid during the period. Move on down to mortgage interest, and let's assume that they've got $2,000 of mortgage interest, no rent, and $100,000 or $1,000 of utilities for the period. All right, move over to owners now. So now this is going to be a little bit different than what we did for the Schedule C folks. So for our entity type, they're LLC, taxes partnership, so we're gonna pick partnership. Again, we see that the health insurance paid by the company and the company retirement contributions do not get to factor in. We'll plug in our owner information. So owner 1, and then let's say that they had, let's say that they had cash compensation of $150,000 in 2019, and then for the payroll period, or the alternative payroll period, they had the same rate of pay. And so if we took the 150,000 divided by 52 times 8, that gives us that 8 weeks worth, assuming it's the same rate of pay. So 23,077 is what we're plugging in there. Notice again, as it comes over to what's actually being counted in the calculation, it's that 15,385. So we're subject to that same limitation of the 15,385 for the 8-week period. We can't go over what would be equivalent to $100,000 annually. All right, so that gets us through all of those salmon colored input tabs for company B. We'll flip over now to the bright blue and look at how our calculation is playing out here. So we've got 78,770 of payroll costs, 2,000 of mortgage interest, didn't have any rent, got 1,000 of utilities. We get to skip this middle part again since we're doing the EZ. Our modified total, which again is our total dollars that we spent during our covered period, they get to count towards forgiveness, is 81,770. Our loan amount we originally received is 100,000. And then this payroll 60% requirement is 131,283. So the lesser of those three becomes the amount we apply for forgiveness on, and that's 81,770. So in this case, our current calculation as we've got it does not get us to full forgiveness, right? Our total loan amount was 100,000. We've only come up with 81,770. So if you ran through the calculator and you got to that conclusion, what you would start to do would be look at, all right, well, what's driving that? And is there anything that I can do? Is there something that I missed or something that I can change in order to maximize the forgiveness? So in this case, we can see we're not running into any problems with the amount we spent on payroll and that 60% requirement. It's really the fact that we just haven't spent all of the dollars during the period. So you'd think about what can we do to increase the dollars that we're spending? Well, one thing is this company is looking at the 8-week period. They could certainly expand it out to the 24-week period and run back everything through with that additional timeline. And once you start to layer in the additional payroll dollars and non-payroll dollars, certainly you'd get there. There could be reasons why they don't want to do that though. Maybe they're thinking that they're going to have future additional reductions in compensation or FTEs that might cause them some problems. Maybe they just want to be done with this thing. Maybe they want to submit their forgiveness application and start getting stuff cleaned up on their books, and they want to put PPP behind them and they're trying to move forward. So then you could really look at, okay, did I capture everything here that I could be capturing? And I had a couple places to go back and look and make sure that you really got everything in there. The wages. So I took a really simplistic, just, dollar amount per week. But as you're looking at the wages that you can include for forgiveness, you got to remember that you can include everything that was paid as well as the wages that were incurred during the period but haven't yet been paid, so long as they do get paid on that very next normally scheduled pay period date. So probably if you worked through things that were actually paid, these first amounts that are paid here, they're going to be for time that was worked the prior week or maybe even 2 weeks prior, depending on kind of the lag on their payroll cycle. So by the end of the period, you're going to have some additional amounts that were incurred. They're actually going to pay out here, but you can include those amounts in that final payroll amount to put into your forgiveness. So include in that final one, not only things that you paid during that period, but also amounts that were incurred but not yet paid. So that would bump that up. And you get to do that over here as well. However, for this individual, they're above that $100,000 threshold. So even if you include that extra incurred amount for them, it's not going to impact your calculation because they're already capped out. On the non-cash compensation though, same thing. So take a look at not only amounts that you have paid, but also amounts that you have incurred, haven't yet paid, so long as you do pay them on that very next date that they're due. So you probably have some rent and utilities that you're going to have incurred, and some mortgage interest maybe that's been incurred during your covered period that has not yet been paid, that you can actually get some additional dollars in. So let's assume though, just for purposes of kind of illustrating this here, they've gone back and this is the best they can do, and this is where their final numbers come out to for forgiveness, and we'll take a look at putting that into the application. All right, so we'll come back to our easy application. We've already talked through these top sections. Say the only area that's really worth or a couple things I guess that are worth pointing out, it's a little bit different with this scenario than we had during our company A scenario. This employees at the time of loan forgiveness application and loan application, when everyone was filling out their PPP application, this was a field on there, but the word employees was not defined. So there wasn't any guidance as to whether you think about this as just your actual number of headcount, so literally the number of people you had on your payroll, or if it was some sort of FTE calculation, and if it was an FTE calculation, it was based off of 30 hours per week or 40 hours per week. So I think we probably saw a pretty wide variety of interpretations on what folks used as they filled out that piece of their application. Now it is clear that employees is intended to mean full-time equivalents based on a 40-hour week. So you'll want to compute these two numbers, both using that same methodology, because you want to have apples to apples. That may mean that this number here is different on your forgiveness application than it is on your loan application. That would be something that you want to make sure you talk to your lender about and explain kind of why you got a different answer now, and it's based on new guidance that has come out. So shouldn't cause any problems, but that is one area that I think is worth highlighting. The other thing then is this alternative payroll covered period. We left that blank last time because Company A did not use the alternative payroll covered period. Company B chose to use it, so we would fill out those beginning and ending dates for that. Moving down then to the next section, we bring everything over just the exact same way. So we've got on our output tab of the calculator our lines 1 through 8. So we would just translate each of those over to these lines 1 through 8. They line right up. We're good to go. The certifications then on page 2. The only real difference here is at the bottom when we're looking at the FTE certification. Our Company A scenario, they initialed this first one, that they did not reduce the number of employees or average paid hours. Our Company B is actually going to fall under the second one. So this is the same languages that we have here on that easy application instructions talking about this reduced level business activity. So we couldn't operate at our pre-COVID level because we were following government guidelines or mandate. So you'd initial that box instead. Sign and date, and that would be the end there. I think the only thing kind of left before getting into any questions that you guys have would be a quick discussion on the documents that are being required. So the documents that are going to be required to submit with your application, as well as other things that you should just keep on hand, are actually listed out in the instructions to the easy application form, and we can get to that from the instructions tab link on the calculator. So we'll pop that open. These instructions here, the first section, it's these same 3 criteria that we've been talking about to be eligible to use the easy form. So we've been through those. Then you've got some definitions of some of the terminology that's used throughout. And we get now to the last page. Here's where we've got the documents. So this first section is documents that you must submit with your forgiveness application. And it's basically saying what you need to do is provide third-party documentation for all of the numbers that are going into your application. So either numbers that are showing up on your application or that were kind of part of the background calculation to come up with those numbers. So third-party meaning printing out some general ledger activity isn't quite going to get you there. They're going to be looking for either a third-party payroll report, bank statements, invoices, canceled checks, things of that nature, as opposed to simply a printout from your general ledger. So lots of examples listed here. Basically, any number that is on your form or that goes into the calculation for those numbers that are on your form, you're going to want to have documentation for. Bottom section then talks about other documentation that you do not need to submit with your application for forgiveness, but that you're going to want to maintain. And these really get into the certifications that you're making around being eligible for using this easy form. So documentation that you did not reduce those salary or hourly wages by more than 25%. Documentation if you ran into some issue with FTE but took the exception about folks refusing to come back. Documentation of those refusals. Documentation of this one down here, we've been talking about this lower level of business activity because of government mandates or guidelines. So who gave the guidelines? When did they come out? How did it impact your business? You're going to want to maintain a file that includes all of that information so that if requested, you're able to produce it. The very bottom here says that you should retain all of that information in your files for 6 years after the date that the loan is forgiven or repaid in full. So this isn't something you're just gonna keep around and toss at the end of the year. 6 years is the timeline that the SBA has to come back and do an audit of your loan. So you'll want to keep that documentation for that full 6-year time period. All right, well, that gets us through kind of our look at Company A example and Company B example. And now let's move into any questions that you guys have.
Great, Kate, thank you so much. We did get quite a few questions. We will try to go through as many as we can, and if we need to, we may stay over an extra few minutes. But if we do not get to your question, we will make sure to connect with you after the seminar to answer those questions. So the first question I have, Kate, is my covered period ended this past Friday. It is my understanding that the forgiveness form is not being accepted yet. Does anyone know when they will begin to accept these?
Yeah, so this is really going to be a bank by bank situation. And so some banks are not accepting those yet. I'm not sure if I haven't heard of anybody that is. I know that some banks did have a 7-1 kind of target that they were hoping to start accepting those. But I was talking with some bankers earlier this week that are not yet ready to accept them. And they're really waiting on guidelines from the SBA and Treasury that more specifically spells out exactly what level of documentation they're going to be expected to be looking at and reviewing and what their sort of responsibilities are going to be. So the banks generally aren't feeling very comfortable yet with what they're going to be expected to do and what level of liability that they might have with this program. So I think that you are seeing banks kind of slow pedal this a little bit. I don't have any date. These bankers I was talking with earlier, they were saying that they were expecting some information from the SBA and Treasury anytime. So hopefully once that comes out, they're able to turn around things pretty quickly with their process. So stay tuned on that one. You do have 10. You do actually have 10 months though from the end of your covered period until the deadline. So there isn't a rush from a deadline perspective, although I do understand wanting to just get it behind you.
Great, thanks. Next question is regarding temporary labor. Should they be included as their employees? We do not have their Social Security information, and if they can be included, Is it acceptable to use the actual payment date we paid their agency, even though it might cover pay period outside of our 8 weeks?
So unfortunately, if you are going through a temp agency and you're actually making payments to the agency as opposed to making payments to the individuals that will show up on a W-2, those are not includable, as they should not have gone into the wages that were used to get your loan to begin with, and they're not includable either for the forgiveness amount. So employees are really just employees that you have and that you are making direct payments to and are getting W-2s from you. And the reason is, since they technically are employees of those temp agencies, the temp agency could have applied for the loan on behalf of, to fund the payroll for those employees. They didn't want to have any sort of double dipping. So unfortunately, temps and independent contractors, as an employer, you are not able to include those as part of your payroll cost.
Thanks for that clarity, Kate. If we laid off an employee and then brought them back during the covered period, would that satisfy the second easy application qualification question? Or would we have to do the full application because there was a period they were unemployed?
Yeah, I think that one, let's kind of go back and take a peek at the exact language there. Move some stuff out of the way. So we've got here, so somebody that was laid off and brought back. So we don't have any issues with our 25% compensation. The second part then did not reduce the number of employees or average paid hours of employees from January 1st through the end of the covered period. So unfortunately, you're not going to be able to qualify for this because you would have reduced those average paid hours during that time period. So if you kind of look at the hours that you paid for every week or bi-weekly, whatever your payroll schedule is for each payroll during that period of January 1 through the end of your covered period, that is actually going to drop down, and that's going to bring down that average paid hour during the period. So doesn't look like, based on that you'd be able to qualify using this second criteria. If they then take a look at this third one and see if you can tie that reduction to guidelines that were issued by federal, state, or local government, and be able to kind of take this exception because of lower business activity. If not, unfortunately, you will need to go through and fill out the full application. Still very possible to get full forgiveness though. Filling out the full application doesn't mean you're not going to be able to get there, it just means you're going to have some additional hoops to jump through to get there.
If you choose to go with the 24 weeks rather than the original 8-week period, is this your new covered period, or is the covered period still considered 8 weeks?
Nope, that would be 24 weeks. So yeah, you actually get to choose if you're going to use the 8-week covered period or the 24-week covered period, assuming that you got your loan prior to 6/5. So if you got your loan prior to 6/5, you get the option. If you got your loan after 6/5, you automatically get the 24-week covered period. You don't have an option to use 8. So it does change that covered period.
Okay, thanks, Kate. We had an employee who took a voluntary reduction in salary of over 25%, but still mails, I don't think that's right, still has $141,000. Can I still use the easy form? He's leaving the company in August and will only work 20 hours per week. Oh, that's clear.
So I think I caught all of that. So let me kind of see if I can answer this here. So it sounds like there's an individual that made over $100,000 in 2019, and during the covered period, they took a voluntary reduction of their pay by more than 25%. So if we look at the second criteria here, the borrower did not reduce annual salary or hourly wages of any employee by more than 25%. And we've got employee kind of bolded here, and down here we explain a little bit more about what they mean. So in this case, employee is only referring to folks that did not receive a compensation of over $100,000 in 2019. So if it is somebody that's highly compensated and reaches that threshold, then they get to be excluded from that. So if I understood all the question right, I think that you'd be good to go there.
Great, thank you. Next question. I am having trouble copying from calculator to calculator employee information. I have had to manually enter each employee information. Is there something I'm doing wrong? Now, this is more of a technical question, but I figured as long as we're on here, you've had that several times.
I don't know. I think maybe having an example to look at. So I've done that and I have not had any issues. So I haven't run into it. So if you are having issues, feel free to reach out to me and I'll see what I can do to help you out there.
We had 4 employees, 3 full-time salary and 1 part-time hourly. The part-timer was laid off. We thought we would be able to use the easy because she was half FTE. Am I understanding you cannot use the easy at all if you reduced payroll?
If you reduced, so you're going to look at so really the easy form. It's interesting when they were talking about a more streamlined approach. What was kind of getting thrown out a lot was having a dollar threshold of what your loan was, and that if it was under a certain dollar amount, there'd be a more streamlined way. When they came out with it, they didn't look at anything about the dollar amount of your loan or if you were getting full forgiveness or partial forgiveness. They really tied it into, do you have FTE reductions and do you have compensation reductions? So they basically said, if you don't have compensation reductions or FTE reductions, we'll use the easy form. So that's kind of the big picture of it. And it sounds like this question is getting at FTE portion specifically. And so, yeah, you'd look at all of your employees, whether they were full-time or part-time, do that FTE calculation from one period to the next. And if you didn't have a reduction there, then you could meet this, did not reduce the number of employees or average paid hours, you're eligible to use the easy form. If you did reduce the number of employees or you did reduce the average paid hours of those employees, so number of people working for you are the same, but instead of working 30 hours a week, now they're only working 20 hours a week. Unfortunately, you kind of get tripped up on this average paid hours and you're not eligible with this criterion. Definitely go ahead and look at that number 3 though and see if you can tie that back to guidance that was issued by a government agency for social distancing, et cetera.
Great, thanks, Kate. We have 4 additional questions. Would you like to go ahead and take an extra few minutes to go answer those questions?
Yeah, I've got a couple minutes.
Okay, great. Our staff paychecks are different every time. How do we compare for any reduction?
I'm sorry, I did cut out there. What was that?
Our staff paychecks are different every time. How do we compare for any reduction?
So this 25% threshold is looking at the rate of pay. So I'm not really sure what's driving the differences in your staff pay. So if it's because there's overtime or not overtime or commissions or things like that, I'd say look back to the base rate of pay for this 25% comparison. If that doesn't get at your question because of your specific circumstances, reach back out to us afterwards. But this 25%, it isn't based on the actual dollars that you're paying, it's based off of the rate that's in effect as of these different time periods. So that might help you, but if not, reach back out to us.
Hey, this is another kind of technical questions regarding the calculator. How does the calculator deal with biweekly payrolls?
So when you are plugging in your information here for payrolls, if you're only paying every other week, you would just So if it was let's say $1,000 every other week instead of 500 each week, you just plug it in for each one that you pay.
Great.
If that doesn't get at it, let me know. But it's basically, you know, whether you're paying it weekly or bi-weekly or semi-monthly, you really just are trying to, this is just a tracking mechanism that you can plug in whenever those payments happen, what they are.
Verify FTE. If the business is open for a total of 24 hours in a week and the employee works this 24-hour period, is that considered an FTE?
So FTEs are going to be based off of the number of hours that are worked in a given week. So if you have somebody that works 40 hours per week, they are 1 FTE. If you have somebody that works 60 hours per week, there's still 1 FTE, so you're capped at 1, you don't get any extra credit. If you have somebody that works 30 hours per week, they're going to be 0.75 FTE. Using the standard method, there is another simplified method that anything below 40 is 0.5, so you've got some options there. But basically, when you're looking at FTEs, it's going to be how many hours were worked during the week and divide by 40.
Is there any calculating on here for being able to count SUTA as part of payroll?
Yes. So on tab 7, the non-cash compensation, and this just means you know, compensation that's not actually going to your employees. There's a section here for health insurance that you're paying on your employees' behalf, retirement benefits you're paying on their behalf, and then also any state and local taxes that you're paying on their behalf. So that's where that SUTA would come into play.
I'm going to take one last question here, Kate. If I received funding May 12th but did not start payroll until June 1st, will this affect my reduction calculation?
So that is, I think if I'm understanding your question, what's going to help you out is back on the instructions tab. You'd plug in here the first date your proceeds were received. That'd be when you actually got your loan, when it hit the account. And that is going to start your covered period. Now, if you have payroll that starts on, if your payroll starts on a later date than that, and I'm not sure exactly what you're saying when you say, you know, you didn't have any payroll start, but I'm assuming you had payroll because you would have had to have payroll to get the loan, but maybe the next pay period start date isn't until later. This is where you can update what that next pay period start date would be, and that would help line up your pay periods with your covered period for payroll. So when you do that, you actually end up with 2 different covered periods. And you can see that over here on tab 7. This top section is referring to payroll related costs. So it is using this alternative payroll covered period starting on 5/11 and going through 7/5. And this bottom section is for non-payroll costs, and that defaults back to the standard covered period that starts on 5/10 and goes through 6/28. So that would be how to kind of use a little bit of a different period for payroll if you want to line it up to your pay periods. Given that you can include everything that was paid and incurred, and given that you can go up to 24 weeks, there's, in most cases, not a lot strategically that's going to change based on which one you use. It just might be a little bit easier from an administrative standpoint to gather the documents that way.
Kate, well, thank you so much. I'd like to thank everybody for attending. It concludes our webinar. The presentation materials will be made available to you in the coming day. Please, again, keep an eye out for the correspondence. We are holding a full-fledged, webinar for the regular application along with the calculator, and that will be next Tuesday. You can follow on our website to register for that as well. Should you have any questions, I ask that you please reach out to us, myself, or even Kate, and I can make sure that we get those questions answered. The contact information will be included in the follow-up correspondence. More webinars are in the works, and we look forward to seeing you then. Thank you, and have a great rest of your day, everybody.